Moderators and guests, please be seated.
All right, thank you. I think the organizer picked the right person for this section. They give me an iPad, because I have to be, right? This section is about technological advancement. So they give me an iPad, but I came with this. I think I still prefer this. I'm getting used to this. Well, anyway, for this particular session is for us to explore whether technological innovation can actually overcome the barriers to financial inclusion in insurance. So that's I guess, this one objective. And the other objective, obviously, is to find out from insurance companies what types of technology they can deploy, they can use, and what types of concrete products that can address these so-called social or financial inclusion. And the last, of course, is whether the financial regulators, what role do they play to facilitate the whole financial inclusion. So with that, this is what I've been given. Those are the three objectives for this afternoon. So with that, Insurance Authority and the organizer have invited a panel of 6 distinguished speakers. Now, although I think it was briefly introduced, but I have to spend just a few minutes to explain to who they are to the audience, because once you know their background, they are super impressive, and I'm sure that all 6 of them can address all those topics I just mentioned earlier. So first we have Jonathan Larsen. So he is the Chief Innovation Officer of Ping An Group, so everyone knows Ping An. And prior to joining Ping An, Jonathan was the global head of Citigroup, retail banking and mortgage businesses. And he has been in the leading edge of financial services for over 30 years. Alice, we all know Alice. Alice is the Deputy Chairman and the Managing Director for the Mandatory Fund Schemes Authority. And prior to joining MPFA, she was the Senior Director at the Securities Futures Commission in charge of policy, China, and investment products. Now, this is very new to me. I mean, not new, but I only found out because I was reading up your CV. She is a member of the Global Future Council on the future of financial and monetary system of the World Economic Forum. So I know where you're going next month. You're going to be in Davos, right? So Tim Lui, he is the chairman for the Securities Futures Commission in Hong Kong. Tim was the lead director of the Board of Partners of PricewaterhouseCoopers in Hong Kong, as well as a member of the Global Board of PwC International. Tim is also the chairman of the Education Commission, very important job today, and a deputy to the National People's Congress of the People's Republic of China. Well, I think the two can be related, huh? Mark, good friends from the industry. Mark Saunders is the Group Chief Strategy and Corporate Development Officer at the AIA Group. Mark is responsible for the corporate solutions, group life, and health for all 18 markets, and he has also served as the Group Chief Marketing Officer. And prior to joining AIA, he was the Managing Director for Tower Watson's Asia Pacific sector and Hong Kong office. And before that, he was the CEO of the UK insurer Clerical Medical in Hong Kong. Go back a long time. Raymond Tam. Raymond is our regulator. Raymond is the Executive Director of the Insurance Authority in Hong Kong, in charge of policy and development, which cover the development of risk-based capital regime, policyholders protection scheme, InsurTech. And prior to joining Insurance Authority, he was the Executive Director of the MPFA since its inception, which I first met Raymond. And also, this is new to me too. He was the recipient of the China First Actuary of the Year Award. I obviously purposely leave the last panel to the last because John Zhang need no introduction, but he's here today as the senior advisor of Bowtie, the first virtual insurance company in Hong Kong. John is better known, of course, as the Hong Kong financial secretary for 10 years. And prior to being a financial secretary, he was secretary for commerce, innovation, and technology. So what better? You know, he's a perfect person to know exactly what the right balance is, because partly he's from serving in the government for over 30 years, but then he's now in the financial sector, so he obviously need to find that right balance. Because I think I always wonder when we talk about fintech, is it the fin leading the tech or the tech leading the fin? I think from the regulator point of view, it's always the fin leading the tech, right? But if you're talking about technology advancement, it has to be the tech first. But this is going to be a topic, I think, for the 6 speakers this afternoon to discuss. And then hopefully we find some wisdom behind it. So let me just get on to it. I know we have very limited time. I was told that we're only going to give 9 minutes to each of the speakers, because we have to finish each for 15 minutes, and then we go to the polling, and then we're going to the Q&A, which I'm sure you all look forward to. So with 9 minutes each, you have to do everything you can to convince us that you have the right answer for the right balance for this, the fin and the tech and the financial inclusion. So let me just first start with our speakers from for the financial sector. So this afternoon, obviously, we have the Ping An, we have the AIA, and Bowtie. So let me just first maybe perhaps address Mark. Your title is the Chief Strategy and Corporate Development Officer of AIA.
Right.
So what exactly is your strategy for AIA, especially when it comes to the technology? I'm sure you must have come across so many different proposals, right? You've been presented, being AIA, the biggest company in Asia and probably in the world. You must be offer all kinds of products. So what do you do? How do you choose them? Or do you do it in-house? Can you share some of your strategy with us?
You say 9 minutes. I think I could take up 9 days with those questions you just asked me.
I'm counting.
So let me be brief. I mean, in summary, our strategy is a purpose-led strategy. We're trying to lead the evolution of the life and health insurance businesses by moving from the traditional historic position of almost a transactional business where, to put it crudely and simply, you die, we pay, or you get sick or injured, we pay, to actually becoming a partner for life with our customers. Now that may sound a bit trite, but we really mean it. We want to partner with our customers where we move from being a transactional commodity to actually a value-added, service-orientated business. And that service is really around helping keep people healthier for longer. So it's the underlying philosophy is the shared value philosophy of treating a social problem as a business objective. And we want to help our customers be healthier for longer by, rather than just waiting for an event to happen, them dying or getting sick, can we intervene? Can we keep them healthier for longer by predicting, preventing disease and illness? But then if they do get sick, by helping make sure they get the right diagnosis, the right treatment, and the best recovery plan. So by doing that, that gives us a real purpose in life, which obviously is good for our customers, it's good for our business, it's good for society and economy at large. So that's a summary of what a strategy. When it comes to technology, we've taken, I'd say if I dare say, a rather pragmatic approach to it. So try to be practical, to take some of the fizz out of it and the shiny toys aspect of new technology. So, okay, how can we enhance our business and serve our customers, our distributors, our partners, our employees better? How do we use technology to do that? So we've got 3 horizons. The first horizon really is around how to operate better. So things are typical processes around new businesses, servicing, claims, management information, really improve the efficiency and effectiveness using technology, digital and data, to do that. The second horizon is really around how we better serve. So how do we better serve our customers, give them better propositions, to your point around this, helping them be healthier for longer. But if they do get sick, injured, or die, of course we pay. But that's the subtle evolution of our business. We're trying to intervene and delay the onset of disease, or illness. And so enhance the experience for our customers, our distributors, our employees, and our partners, again, through technology.
Do you develop in-house or you buy from?
Again, in this rapidly changing world that everybody's talked about, you've got 3 decisions: buy, build, or borrow. Right? 2, candidly, my view, to build things in-house, by the time we've built them, they'll be out of date with the rapid. So we are partnering. And so we're building, like many organizations, ecosystems of partners. Those are the ones that can help us on those health journeys of people, delivering better health outcomes, but also better technology. So we're very selective in the partners we choose. So it's mainly the buy or borrow models that we're employing. But of course we do some building, because we've got some legacy systems as well that we have to build in-house as well. So that's that. Then there's the third horizon, which is really around evolving better. So that's looking at new business models, and we'll touch upon like Bowtie, direct digital as well. So we're experimenting in that area. But at the same time, this focus on this ecosystem we want to build up of technology partners. In order for us to intervene in people's lives, we need technology like wearables and tattoos that you'll have, and implants and ingestibles and things that we'll have to monitor our bodies later. We need that technology in order to give us the information such that we can positively influence people's health and help them. So that's the third area where we're evolving better, I would summarize. So taking those, that's sort of an outline, the framework of what we've done. But I do have to say that AIA is not a technology company. We are a life and health insurer and also a partner for our customers, helping them be healthier for longer. That's what we are. But we need technology to enable, empower, and bring that to fruition in terms of delivering on our purpose. But despite not being a technology company, you may have heard of the Sealant Award, the Model Insurer of the Year Awards. It's in its 13th year. Ceremony was held in New York earlier this year. And there were 19 finalists who got awarded different categories of digital and omni-channel. I'm just reading them out. Legacy and ecosystem transformation, innovation, emerging technologies, operational excellence, data analytics, and artificial intelligence. And this is to really recognize excellence in the insurance industry, in technology, because we may not typically think of insurers as leading edge in excellence in technology, but these awards recognize that. And I can see Peter Crew here, our CEO of our AIA Hong Kong business, very proudly one of the winners in this excellence in data analytics and artificial intelligence at these global awards. So there's global insurers and local domestic players, and AIA Hong Kong was one of those award winners. And pleasantly surprised that AIA Group won the Model Insurer of the Year for advancements in technology. As I said, we don't blow our own trumpet. We don't talk about how much we invest in technology. We just roll our sleeves up and get on trying to make technology make our business better. And that Model Insurer of the Year is one that, this is interesting, delivers the most impressive tangible business benefits. So that's really been our positioning around the use of technology. I could go on, but I think I'll probably use up my time.
Okay.
Thanks, Bernard.
Well, you're welcome to ask him specifically what tangible products later on we can have.
Tangible business benefits. So bringing down our costs, servicing our customers quicker, delivering better propositions. But let me give that's one of the specific categories is social impact. And so this AI Vitality program we've got, our wellness program, we now make it clear that we have about 1.5 million members of AI Vitality on our wellness programs. Those basically encourage physical activity. They reward you. They make you aware of your health. They help you improve your health and then reward you for doing that. Now that's that system. So with that, we've been running this program for a while. 1.5 million members. Of those who are actively engaged in that, a number of those people, we take biometrics on day one, and some of them have got unhealthy BMI, of course. Now, through being engaged with the Vitality program, 21% of the people who had unhealthy BMI have now got healthy BMI. 38% of people who had unhealthy cholesterol markers have now got healthy cholesterol markers. And 56% of people who had unhealthy blood pressure have now got healthy blood pressure. So it's not going to change the world, just that, but it's a simple, a pragmatic example of how we actually are having a positive influence and helping thousands upon thousands of people.
I assume that will be lower premiums too, maybe?
Sorry?
Lower premiums?
Yeah, that's one of the rewards, Bernard. Whatever tickles your fancy. If you want a cup of coffee, a cinema ticket, some air miles, or a discount on your premium, or increased benefits, up to you. Whatever will motivate you to change your behavior as a habit of long-term better lifestyle.
All right, so my traditional insurer, now I turn to a digital insurer, a virtual insurer, John. First of all, John, before you start, I'm a bit disappointed with you.
Sorry?
You are bow tie insurance. How come you're not wearing a bow tie? I thought you don't have to say anything. You just wear your bow tie and then, sorry, no. My question for you.
I think for most tech companies don't even wear a tie.
That's right.
What are you talking about? Well, as you know, I've been financial secretary for 10 years. The job is basically regulatory in nature. We do a lot of liaison, international connection, and so forth, but it's basically a political job. So I haven't done really any actual work in finance. It's not the nature of the job. So after I left government, I quickly joined Bowtie. I always have, when I left, I told myself I have 3 criteria if I want to join anything. 1, it's got to be young people. 2 is technology. And 3 is disruption. So it fits all of those 3 criteria, so it's that perfect fit. So, but Bowtie is a startup, and I'm a newcomer to a startup. So my experience in the insurance industry is really, you know, nothing compared to everybody sitting up here. But in this past few months, it's been a sharp learning curve for me. Learn a lot of things, been doing quite a bit of reading in this, and what strikes me, I'll just name just one fact, is that of the $100 premium in Hong Kong, less than $2 is spent on pure protection. I mean, over $98 is in investment and all of that. But what that means is that a lot of people who need the insurance, who deserve the insurance, are not getting it. And there's something that we need to do, but it has something to do with the nature of the structure in the insurance company. I mean, and that's fair enough, because the current structure does not have the incentive for people to get into a lot of this sort of low commission areas, and that is natural. I think that is perfectly understandable. I mean, I don't want to sound like a bleeding heart now that I've left government, but I think that is something that we need to look into, because it would have huge implication on the fiscal system in government as we move on, particularly when we are getting older, and as you know, the cost to government in our last couple of years is really the largest. It's probably the sum of everything that you have in your entire lifetime. And what is exciting about a virtual insurance company is the ability to set up this digital platform once and for all with little marginal costs if you add on different things. And you can get into a lot of the niche areas that a lot of the traditional insurance companies will not get into, because for the simple fact is that we don't charge commission. And when you don't charge commission, you can really explore a lot of these areas, and hopefully you would be able to reach a lot of these people in the, you know, at present, so-called underprivileged groups to help them. So in a way, I think what we can do with technology, and there's a lot more room that we can do that, we can use that to bridge what we are helping out with that whole inclusion aspect in the community through the use of technology.
Fantastic. Well, you are definitely a disruptor in that case, right? Because, so I'm going to turn to Jonathan. So here you are, you have a traditional insurer, and then you have a startup, a disruptor. And where's Ping An fit into this thing? Now, obviously, whenever a Chinese company's name is mentioned, we have a huge expectation of a much more advanced platform, because in China, with the scale and everything, you know, you can justify for such type, and being the chief innovation officer. So I was just asking, what is InsurTech to you means? I understand that you have a PowerPoint to share with us, to show off exactly what Ping An can do, because it's amazing how China is moving ahead in that whole technological revolution. Everything that we are so accustomed here is dated compared to what is happening in China. So can you help us?
I'll do my best, Bernard. Thank you very much. And I'd like, first of all, to thank the Insurance Authority for including Ping An in this forum. Hong Kong is a very, very important place for us, and we've had some general insurance operations here for a long time, particularly in auto. We're in the process of applying for a life insurance license here, for which we hope to be successful in due course. We were very fortunate to be awarded a virtual bank license for one of our subsidiaries, and are trying to expand the operations of Ping An Bank. So we hope we can bring some value to Hong Kong and some connectivity to China, and certainly bring some technology with us with our operations here that will be helpful to the industry and to consumers and companies here in Hong Kong. My role at Ping An, as you said, Bernard, is I'm the Chief Innovation Officer. I have another job looking after something we call the Ping An Global Voyager Fund, which is our $1 billion corporate venture capital fund that invests in fintech and digital health on a global basis to find companies that can be helpful to Ping An. Even though we do a lot of R&D and internal business development, we certainly have no presumption that we know everything and that we have a monopoly on innovation in our industry. As you said, I do indeed have 2 slides, and I hope this is not a burden for people to look at, but I thought it might be good just to give just a very quick snapshot of where Ping An has come from and what it really is all about. And I think that will get to the heart of your question, Bernard. So I think the first thing to understand about Ping An, it's the only non-state controlled or non-government-linked large financial institution in China. It was founded in 1988 by Peter Ma. It's an entrepreneur-founded and run company. And I think it's gone from literally zero to being a $230 billion market cap today. And it's grown at about, I think in net income, 25% compound through that whole period, which means that the company triples or slightly more than triples every 5 years, which is kind of a nice way to be. The company spent the first decade and a half or even 2 decades in building out a platform, starting with P&C insurance, marine hulls actually, getting into life insurance, and then a wide range of financial businesses. Peter has always had the vision and the premise that there is value in bringing together and integrating a wide range of financial services around customer needs. And I think Ping An is one of the very few companies in the world that has successfully prosecuted that vision. Many have shared that vision, many have failed to execute it. And I think where the story becomes interesting for this group today is the end of the first decade of the 2000s. So while the world is having the financial crisis, what's going on in China is you're seeing the rise of Tencent, Baidu, Ali, and other technology players. And in Peter's mind, this was a transformative moment. He could see e-commerce changing the nature of the retail business, social network changing the basis on which people interact in a society and the entire way in which information is transmitted in a society. He could also see that technology in a similar way was going to fundamentally transform financial services, and in his mind this was both a threat and an imperative, but also an enormous opportunity. So he made a decision to pivot the company to being a technology-first company. And I think it's the only example in the world of a company anywhere close to this scale in a range of traditional financial businesses that have taken this particular path. And I think, what did that mean? Well, first it meant looking fundamentally at a lot of the core processes and digitizing them. So today, for example, we have 1.3 million life insurance agents. And you might ask, what does a technology-first company why does a technology-first company still have life insurance agents? We still very much believe that the consultative process is important in engaging with customers and helping them understand both their savings and their life insurance needs. But every aspect of the agent's job is supported by a technology platform. There's CRM. Every agent, for example, has a WeChat network of prospects and customers. Those prospects and customers are constantly fed relevant content. All of that is automated. It is all vectored based on the specific profile of each customer. And when the customers want to engage, the first iterations are all automated as well through intelligent chatbots. And it's only once it actually is relevant or helpful for the agent personally to be involved that the agent actually gets involved. The consequence of this and many other things, for example, we recruit agents online. At our scale, we've found it to be both more productive and actually more precise and more accurate in finding the right people and reducing churn through chatbots. And we've actually downsized dramatically the human team that we had supporting that activity. A lot of our training is bite-sized, real-time, interactive, driven either through voice or chat, very specific to the needs of each agent. The consequence of all of this in the agency side is that our agents are about 2x the productivity of the rest of the industry in whatever measure of business generation you want to look at, VONB per agent, for example. And that obviously has an enormous financial lever and an enormous advantage to a company like Ping An. In places like auto insurance, Ping An pioneered telematics in China. So we have, I think, the largest telematics program in the world. We use the mobile phone, not an in-car box. We found that the boxes just are very hard to administer. Clients don't want them. They disconnect them. They throw them away. They lose them. The mobile phone, it turns out, has incredibly sensitive technology. So we can tell how rapidly you're accelerating, whether you're braking too hard. We know exactly where you are. Of course, all of this is user permissioned. And we're able to build up a driver score very accurately to understand driver risk. And in those parts of the country where tariff pricing has evolved to market-based, there are 3 provinces right now, we're able to use that to set pricing in a dynamic way. So that's a very powerful enabler for us as well. Many other examples, but another example, you have a ding in your car, you stop the car, you get out, you scan the damage. We've got an engine that can assess basically every single external part of a car, price the damage, price the parts and labor, decide whether the part needs to be replaced or not, and give you an instant assessment. And if you choose to, up to a certain dollar limit, we can actually settle to an e-account instantly, and you're done. So we've just truncated a very complex process. We get 15 million auto claims a year because we have 55 million cars that we insure in China. And we've just truncated a very complex process that's inevitably very manual. And this technology is involved in about 70% of our claims now. Not that it's not necessarily end-to-end involved, but it's an enabler and has a dramatic effect on efficiency. Alongside all of this, Ping An decided to pivot to cloud. And so today, it took 5 years. We got rid of every single legacy platform that we had and either ported, rewrote, or purchased all of our applications. They all now run on exactly the same platform, which is commodity. It's very similar to what you would see at Ali Cloud or at Amazon Web Services. And of course, it's a private cloud. We would never have been allowed to do this with a third-party cloud when we started 5 or 6 years ago. And we're even providing extensive cloud services to third-party clients. And every piece of technology we build today is modular, it is API-linked, and it is fungible across every part of our company, including all of the 32 businesses at the first level for Ping An. So that's a huge enabler. We quickly found from there that we could actually build entirely new businesses, such as Lufax, such as Ping An Good Doctor, which now has 300 million registered users. It's listed here in Hong Kong. It was created by Ping An from nothing 6 years ago. And what that does in China is it fills the gap. There is no primary care system in China. As those of you who know China well will know, you go to a state hospital, you line up in a queue, you usually get 3 minutes with a specialist. There are usually other people in the room. It's not a great system. There are pockets of excellence in China's healthcare system, but on average, it leaves a lot to be desired. This is fully recognized by the government and the health authorities, and there are many plans to change this. But telemedicine plays a critical role in providing first-level care access to literally hundreds of millions of people, and I think that addresses, one dimension of what you asked at the start on inclusion. So I think Ping An is somewhat unique amongst financial institutions as well in its ability to repeatedly create new businesses at scale. I can't think in the last 15 years of really any others. Perhaps the only one that comes to mind is the Marcus platform created by Goldman Sachs, first in the US for lending and deposits. Even part of that was actually an acquisition, and more recently in Europe. And I think the premise of our business going forward is that we are in a data economy, that our value increasingly will be dependent upon our ability to derive value from data. That's easy to say for anyone that has tried to do that and tried to make money out of it. It is a very, very difficult thing to do in practice, but we think that is where our whole business is heading, and probably the whole economy that we live in and work in is heading. And that's really what Ping An is all about. We think that the assets that have made us successful hitherto will diminish in importance, including even our capital. And just to some very quick metrics, I think there are three really critical enablers for us that make, I think, Ping An unique. One is our access to data. Across all of our platforms, we have 600 million digital users. We have large agency force. We have a lot of credit records. On top of that, we have, as I mentioned, 32 business lines and 200 million financial services customers. So we think of almost everything we do as a technology use case, if it hasn't been automated and had machine intelligence applied to it already. So we have an almost infinite number of things we can apply technology to. And in the last decade, I think the company has been pretty successful in becoming a magnet for talent. So we have a lot of people that are US PhDs, master's degrees. We have a couple of thousand decision scientists now. We build our own facial recognition. We build our own natural language. We do all of the visual recognition of car damage I described, is all built in-house. So we have very rich capabilities. But as I said, we're under no illusion. There's plenty of smart people in the rest of the world, and there are lots of entrepreneurial companies. So we're always open to new ideas. And I think to put all this together, to make it work at scale, I think it's created something that it's going to be very difficult for other companies around the world to replicate in exactly the same form.
No kidding. Wow. But Jonathan, can you do me a favor? Now, some of you may not know this. About 20 years ago, maybe even 21 years ago, I can't remember now exactly, 1998 or 1999. I think it's more like 1999. What happened was, this session is not about me, but I have to talk about this story. So back in 98, by July, I got elected by the insurance industry to the Legislative Council. And shortly after that, your chairman, Chairman Ma, organized a lunch, invited me and the then HKFI, the Hong Kong Federation of Industries, chairman, Robert Carr. Some of you know Robert. So Robert Carr and I were both invited to have lunch with your chairman in Shenzhen, in Ping An. I don't actually remember anything from that lunch, except that he was showing us this satellite broadcast. He has a satellite broadcast like feed in his office, right? Big, huge satellite. And I was like, what's that for? Well, this is 20 years ago, right? He said, oh, we have hundreds and thousands of agents all over China, and we need to use the satellite to beam a message to our agent. I was like, really? Well, of course I didn't say that, right? But I'm thinking, wow, I mean, that was 20-some years ago. So I can I can see why you're now developing to this, because that vision has always been there from day one. Yes. I mean, I'm seriously, this is a story I share, because I saw that 20 years ago, but at that time, I didn't think it was a big deal. I thought, oh, come on, we don't need the satellite, we need agent. We need, individual agent who sell the policy. Why do we need a satellite to feed these messages? But, well, look at this.
Yeah, so, no, I think it's very interesting. I'm sure there are people in this room who've had the pleasure of spending time with Peter, and it's just always an incredible experience, because he is so visionary and he has such a profound belief that technology is going to change pretty much everything we do. And we think right now where the various domains of what we call AI, they're really just high volume recursive statistical applications, often many layers, many ways of putting them together. But what we call AI, some of the ways of building digital representations, blockchain, tokenization, digital twins, and a range of other technologies, obviously powered by cloud computing. We think that these things, combined with the fact that everybody has a high-powered mobile device now at low cost, this is a really transformative time. So Peter's been working on a lot of these ideas for a very long time, and I think we feel right now there's a convergence of enablers that allow change to accelerate. And I think that's probably relevant to our speaker earlier, and talking about the pace of change and the trajectory of the insurance industry in particular.
All right. Well, now we heard from the three industry players, from a traditional insurer to a market disruptor to, I don't know, Ping An. Ping An is a class of its own. now we're going to turn to the three regulators. What can you do for us? You know, because let me turn to Alice first, because we just spoke recently about your EMPF, which is a big initiative from the MPF authority. I suppose it comes down to cost, right? How do you help to reduce costs, and how do you make it more accessible, right, to your policyholders? So can you tell us a bit more about your EMPF and what's the vision behind it, and what's the end game with this EMPF? Would that change the mindset of people? Because MPF clearly is considered not exactly the best friend among the people in Hong Kong. They tend to see MPF is a tax reduction, right? So deduction, sorry, not reduction, tax deduction type of thing. So how would this EMPF change that? Would that make people more willing, you know, to save more money?
Right. Thank you, Bernard, for the introduction. And first of all, thanks to Moses and Clement for inviting me here as one of the panelists. I'm thrilled. Actually, I'm the only lady speaker around, so I'll try my very best to explain a bit of our EMPF platform here. Just to steal a few seconds to do some advertising, we just released yesterday in the afternoon our tender documents for the EMPF platform, for which a funding of 3.3 billion Hong Kong dollars has been obtained from the Hong Kong government. So I think I have the duty to tell everyone here involved, and for those who are prospective tenderers, please watch out for the deadline for submission is on the 9th of April 2020. So we've got 4 months for you guys to form consortium and come to bid for that big job. End game, I think I start with the end game, which is the vision. And I think our chairman has crafted in very succinct terms. The vision is actually to ensure that all our members in the MPF system would have accumulated sufficient wealth for themselves so that we have a better retirement outcome. We can't be replacing, obviously, all the pillars in the World Bank model of retirement savings, but we need to be a strong and robust pillar. And I know a lot of people just don't like the term mandatory, but this is exactly what the system should be doing to instill in everybody a culture of a discipline, of a financial discipline that could help you save irrespective of good times, bad times. And I think that's the more important thing. And the discipline, I think as one of our speakers already pointed out, the discipline may not help everybody, but it would help to reduce certain level of cholesterol if you keep exercising. The same applies for a financial discipline. So I think the vision has to be right. And I think as the regulator, we always have to do the right thing, right? So I see the regulator's role here as a compass. So I think in starting the transformation process, we start with the vision. Actually, something shared with AIA as well. The vision has to be very well defined so that when we articulate why are we doing it, we always come back to this compass and say, we are doing it for the betterment of the whole universe of the MPF population. So I think that's very important when we started the project. And I think there is enough demand because, as Bernard just mentioned, there is a lot of demand because of the negative sentiment. So this is actually sometimes negative sentiments or criticisms actually propel the systems to mature and reform and disrupt itself faster. And so I think we are very thankful for the government to make that very bold decision to, rather than wait for disruption to happen, the government and the MPFA decided to introduce disruption itself into the MPF industry by pulling together a centralized platform that would connect all the 14 trustees so that going forward, the 14 trustees do not have to maintain the 12 IT business systems. So they will only be replaced by one single barrier-free and cost-efficient system that you will be able to do your MPF accounts management from end to end. So I think that's what the true meaning of financial inclusion is, because I was trying to rummage through a few working definitions. I've got this one actually from the OECD website. The working definition of financial inclusion is the process of promoting affordable, timely, and adequate access to regulated financial products and services and broadening their use by all segments of society through the implementation of tailored, existing, and innovative approaches, including financial awareness and education, with a view to promote, and this is very important, financial well-being, as well as economic and social inclusion. I think the EMPF platform simply is spot on. This is exactly what we should set out to do, to promote the financial well-being in a cost-efficient, easily accessible manner to every working population in Hong Kong. So I think that with the vision, I think we've got it there. So the next question is what to do with the vision, because vision is good, and you can keep imagining and keep dreaming, that's most people would say. But you've got to put it into a mission, and workable mission. In our space, it's very challenging, as I mentioned. We've got 14 trustees, but we are commanding 930 billion Hong Kong dollars as under management across 400 plus funds. On top of that, we have a cohort that is 4.3 million users. So we've got 4.3 million account holders, but they are holding 10 million accounts. So some accounts are small balance, dormant, left behind. Some are even unclaimed because the beneficial owners passed away without leaving sufficient identification around. So there is surplus money unclaimed in the system. Unless we do something about it, unless we introduce a platform that can connect to the users, the beneficiaries, and also to connect to their identity, we cannot actually make sure all these retirees will get the pots of monies they should get at the end of the accumulation of 40 years, because 40 years is a long time. 40 years is a long time, and you probably forget where your account statements are. So we need that portable, wearable device, whatever you call it. It could well be implanted, maybe in 20 years' time, it will be implanted as a chip in your brain. But anything that you can carry with you that can identify yourself as yourself, and you'll be able to, even if you've got a cognitive issue at 65, you'll be able to withdraw it or turn it into a public annuity. I think that's the mission we want to say to the members. So I think we've got enough stakeholder support on that front. Trustees, we also have to craft the right messages, because all the trustees are saying, I'm waiting for a chance to unify our standards, but waiting and hope per se is not a strategy, okay? So something has to be done. Government make the very good decision that this has to be done, and has to be done by a, what we call a non-profit making and non-partisan perspective, which is the public body, the MPFA. So I think we were tasked to do that because we stand in the middle and we were able to moderate different interest groups amongst the trustees. And we heard the trustees were grateful too, because this type of utility services actually does not actually cost them a lot, but does not bring them a lot of what we call the marginal benefits. So by removing this cost component, they could focus on doing actually what they are best in doing, i.e. picking the financial solutions, robo-advice, they can think about robo-advice in the future. They could introduce what we call withdrawal products, longer-term retirement products, and they could actually help clients better by connecting also through the intermediation. So I think we have the vision, we've got the mission and messages to different cohorts, and the final thing is put into action, which I just mentioned at the opening. We issued a tender, and we put all this mission and vision messages into our tender. So if you are very interested, you can enroll on our website and get an electronic copy and read through. We actually started with the first page stating our vision, which is what we wanted to do to achieve better retirement outcome for all our participants, and hopefully also increase the overall savings for the aging population in Hong Kong.
Okay, wow, all right. So now, after hearing from, we have a digital bank here, and we have a virtual insurer there. Tim, how come I don't hear anything about like a digital or virtual broker? Although, of course, there's online broking already, right? So how come you don't have that buzz like the banks and the insurance are doing? To many of us, SFC is more about investor protection. So how's technology and investor protection can strike that balance, a good balance?
Yeah, thank you, Bernard, for the for the question. Yes, SFC has a role to play because by law we have to regulate the market make sure that we have an open, fair, and effective market. And allied to that is the point about investor protection, which is equally important. But having said all that, we are also very mindful that apart from our regulatory role, we are also there to facilitate market development. So as far as technology is concerned, we are neutral. And because we only look at, if you apply technology, as long as the regulatory aspect is taken care of, we don't compromise on the regulatory responsibility of the of the firms, as well as our ability to do our supervisory, regulatory, and even enforcement actions. We are fine with that. So, and we understand that nowadays, the consumers or the investors, their expectations are very different from the past. They now expect that they are able to access financial services online at any point in time, in the evening, in the day. And they also expect instant response and instant services as well. Now, these put a lot of pressures on the corporations that we regulate, and they have to respond to that in order to satisfy these customers' demands. Take, for example, in the very traditional area of asset management. Now, asset managers have to go and acquire robo-advisors to assist in automating some of their sort of investment advisory services, as well as using technology to perform investment analysis and even coming up with customized products for the clients. So as a result, over the years, SFC has been very recognizant of this fact, and we have done quite a lot to update our regulatory approach to facilitate these new business practices. Moses, when he invited me to the forum, wanted me to share some of the work that fellow regulators are doing. We actually have a fintech contact point whereby new startups or corporations using new technologies can come, and we are able to get in there early, understand what they are doing, as well as, most importantly, we are able to offer some observations and advice in terms of the safeguards that we're looking for. And, but our attitude is always to facilitate that, as opposed to obstructing. So I think that is an important point. And one of the focus that we have been working on quite a lot is really the promotion or the growth of online platforms. And that's why over the past few years, we have done quite a lot of, or carry out a lot of initiatives in this area. Just to name a few, I talk about the fact that we now have these online platforms to even offer distribution of investment products, these advisory services. We have recently sent out a circular to actually set out very clearly, what we expect in terms of the design and operations of these platforms. We now accept that brokers can open accounts with individuals using electronic signatories. And we have even gone one step further in response to market demands. We are allowing brokers to remote onboard overseas clients as well. But of course, at the back of it, we have a series of safeguards and procedures that we expect them to observe. Now, recently, we have been talking to the industry, and they have been telling us that they have to accept orders through instant messaging now, which is very popular. We don't have an issue with that. We accept that is okay, but we also issue guidelines to tell them, what are the necessary steps and safeguards that we expect them to put in. And all these are really aimed to facilitate the business development. And during that process, we keep in close contact with the industry. We have a fintech advisory group in SFC comprising of industry leaders. So we talk about these things and make sure that we are all in alignment, and then when we push it out to the market, that is fully operational. So that's one particular aspect in terms of how technology can help to promote the growth of the securities and futures markets in Hong Kong. And if we got time later on, I can talk about internally how the SFC use technology to enhance our work as well.
Wow, thank you. Well, actually, I'm more interested in, I think someone else also talked about it earlier, about getting the right people for those jobs too. Maybe I'll ask our next speaker, Raymond. Now, by the way, everyone, we did not prepare for this. This is all impromptu, right? So I actually have no idea what each of the speakers about to say. So this is how great it is. This is because impromptu answers are the best answers. So let me talk to Raymond, because we didn't have a chance to talk about this. So I need to be careful because you're the my regulator, so I know I can't offend you. And I cannot ask difficult questions too. Because I was going to say, hey, your fast track is so slow, but no, I can't ask you that. You didn't hear from me. But seriously though, how is the IA help to facilitate the industry by use of technology? What is your plan? Given that this is such now in high demand, and we have the virtual insurers next to you, and you have 2 license issues so far, and so on and so on. What is the roadmap, apart from RBC and everything else too? So how important is InsurTech in the list of your priorities within IA?
When the IA took over from the previous OCI back in June 2017, we look at that question, and we look at InsurTech. And what we find that Hong Kong insurers, in a way, is not as proactive in using InsurTech compared to the insurers in North America or Europe. I think the reason is because for life insurance company, they basically rely on the tied agency model. Because in Hong Kong, we have 110,000 insurance intermediaries. That means, more than 3% of the working population are selling life insurance or insurance. And also, like Jonathan mentioned, the legacy platform, and insurance company, they keep upgrading the legacy platform. It takes, 5 years or so to upgrade to a new version. By the time that's completed, that's already outdated. So they embark on another, upgrade. And then for the general insurers, we have 92 insurers can sell general insurance. So the market is fragmented, they're too small, and they're not that profitable because every year, in the past, they lost on motor insurance and easy business. So we need to do something. And also, the latest generation, Generation Z, I heard a story about, Generation Z having lunch with the parents, but they only talk through WhatsApp. So they do everything, using smartphone. So in the future, they buy insurance only through, smartphone. So the traditional distribution model might not work. So that's why we came up with 2 initiatives: the fast track and also the InsurTech sandbox. The fast track is to have a sort of speed up process, a dedicated queue, to approve virtual insurers. The idea is we are not relying purely on the virtual insurers. But once we authorize virtual insurers, actually it gives impetus for the incumbents to also invest into InsurTech. And also the InsurTech sandbox help them to be bolder, to experiment with new initiatives. And so actually we have seen the results. We have seen the industry has responded positively, and they invested money, and they bring in experts like Jonathan. So actually we see that the industry is moving, catching up fast, and also another mentioned inclusiveness. I think inclusiveness doesn't mean only to have enough people to buy insurance, but we also need people to buy enough insurance protection. So actually, we mentioned Hong Kong is ranked the world #2 in terms of insurance density and insurance penetration. And actually, in terms of number of insurance policy. It's perhaps even top the world's ranking. Because believe it or not, in Hong Kong, we have 14 million life insurance policies in force. So that is 2 policies per capita. And so we conduct a research on the life insurance protection gap. Our economists come up with a number, which is big. The protection gap actually is 6 trillion Hong Kong dollars, which translates to actually 2 million per economically active person. So in a typical family, you have a protection gap of 4 million because 2 people working. So that means we need to encourage people to buy more protection. In China, they did that a few years ago. The regulator say 保险性保. So they banned the sale of savings policies. Like those 2 pay 5, they no longer approve them. So, but we cannot do that. So I think InsurTech is well suited for this. As mentioned by John, the marginal cost for selling a new insurance policy is very small, much lower than the traditional distribution channel like agency, brokers, or bank assurance. But of course, they need to put into the initial setup cost. And so we find that particularly for the protection policies, where the average premium size is relatively small, and so it's, we need a more efficient distribution model. But on the other hand, for the agents, the intermediaries, actually, I used to be in charge of product and marketing of life insurance company, and we find that the agents, they have limited ability to manage a portfolio of products. So what we come up with, actually, we come up with standard menus. This is menu A, this is menu B, menu C, only a few menus. And end up most of them just sell savings policies. But if they are armed with InsurTech, I think they have the ability to come up with more sophisticated, more tailor-made solutions to meet the needs of the policyholders, so that the policyholders will end up buying more insurance and getting more protection. And I think so far, if we sort of look what we have achieved so far, I would say that we are still at the early development of InsurTech, or we can say is we are only at the end of the beginning. And also, we have authorized a couple of virtual insurers, and also some existing incumbents turn themselves into sort of a digital insurers. But I think we are still more of a digital insurer than a virtual insurer. Because as a digital insurer, actually, both the models, the business model, the products can easily be re-engineered and copied. But if, like Ping An, they integrate technology into the business model, so that means we encourage the digital insurers to be bolder, to integrate more into the InsurTech, into come up with bolder products, innovative solutions. Then those things cannot be duplicated. How can you recreate another Ping An? It takes many years. So it's and also I think 5G is coming. So the Internet of Things will come. So people will integrate more and more of the daily life with technology, with a smartphone. So we need, and that actually created much bigger space for InsurTech to develop. So if we sort of integrate our insurance solution with the Internet of Things, with AI and so forth, I think that create a lot of future growth potential for us.
Okay, thank you, Raymond. Now that you bring this up, it's now for me to turning digital from this to this. Because the next session is about a polling. So here you are, you can see from the screen. Which of the following technologies will have a greater impact on the insurance sector? So you have 4 choices, A, B, C, D. So please vote. Okay? I don't know how much time we give them to vote. Not much time, right? I hope. 20-some seconds left. So between the 4 choices, please choose one. Some of these actually been mentioned by our speakers earlier. So which of the 4 technologies you think will have a greater impact? Okay, well, let me know when the result is out so we can then move. All right, here we are. You have the result. Results coming. Is it done manually? Oh, no, okay, all right. Oh, here we go. The first one. Big data analytic, machine learning, artificial intelligence. Jonathan, is that what you're predicting too? Is that, you're doing all 4 things, right?
Yeah, we are. I think it's probably correct. I think probably big data, analytics, advanced statistics, and machine learning, artificial intelligence are probably at the core of the transformation that we're seeing, and probably underpin, most of the innovations that are likely to be really significant. They may well be combined with, one or indeed all of those other things.
Okay.
I mean, Jonathan, I'd just jump in. I think, obviously, cloud computing gives you the capacity to actually to undertake the advanced analytics that we're going to need, and the AI, machine learning, all those aspects. So to me, Bernard, it's actually cloud computing, although it's scored very low, is critical in order if you're going to do anything on the big data scene. So the answer is dependent upon the
maybe it has to do with the age profile of our audience. maybe they see it differently. John, you're the virtual insurer now. Given this data, this is the outcome. I think you can put more focuses on perhaps.
I think that's pretty normal. I mean, you would have expected that. It's got to be the data, but that is really is not a. I mean, not everybody can get all the big data. I think big companies like Ping An will have a lot of that data, and I think it will make their actuarial estimations a lot more accurate than everybody else. We have big data, but much smaller scale.
Yeah.
So I think that there must be some corrective things that we need to do. So I think there must maybe some way that the insurance authority can work to democratize data.
Wow.
For everyone.
Or get us all a license in the Greater Bay Area so we can extend our reach, and then you have a bigger data. Wow. Thank you, John, for opening that opportunity. Now, I have part of my job as your moderator. I make sure that we finish on time. We still have a good 8 minutes, and we have a number of questions here from the audience. Let me see. Okay, let me go with this one. Didn't say who, but I guess any one of you can feel free to answer the question. Now, what would you expect of the disruption that the fintech will bring in the next 3 to 4 years ahead? So what kind of disruption can you expect in the next 3 to 4 years from fintech? Jonathan?
Well, I think Raymond said it, we're at actually a pretty early stage of fintech impacting finance and impacting the consumer. And I'm not aware of a single insurance company, bank, or asset manager that's actually gone out of business anywhere in the world because of fintech yet. Not a single one. If anyone knows of one, let me know, please. I know plenty of such companies that have gone out of business because of poor risk management or bad management in general. But in other industries, of course, we've seen entire sectors wiped out by technology, media and communications being a very obvious example. So I think we're still in the early stage. My personal view is that most of the transformation will be led by the incumbent industry. And I think the incumbent industry will divide into what we can call a relatively small groups of haves and a lot of have-nots. And I think those that can change from within, who can overhaul their legacy platforms, who can get to that marginal cost of almost zero to sell the next policy and service the next policy, who can be very thoughtful in how to extend technology and integrate technology. One thing we're big believers in Ping An is what we call ecosystems, so the ability to actually bring services that have traditionally been separate, let's say financial services and e-commerce as an example. We have a company called Auto Home that sells cars online in China, and we're integrating insurance, financing, and a whole range of data services into that company as an example. And so actually trying to bring financial services into the consumer purchasing experience for a car in a way that was separate in the past or offline in the past. We think companies that do that very effectively will do very well. We're also seeing the ability to extend technologies that have never really been applied. The same people in our company that do facial recognition, I mentioned this, are the same engineers that built, the auto damage tools to recognize car damage. Those same people are actually now working on medical imaging applications to identify diseases from let's say pictures of the retina or CT scans of people's lungs or other vital organs. So I think companies that are able to harness these technologies and extend them horizontally into many new areas of applications will find very high yields as well.
Mark?
Yeah, please, Bernard, if I may. So I agree with what Jonathan said there. Just a slightly different spin on it. Technology, we live in a technological world, a technology and digital world, whether you like it or not, that's the world we live in. So you will be disrupted if you do not integrate into people's lives, and people's lives are a technological world. So the disruption will happen to those who don't integrate into the technological world, firstly. But I do want to bring this back to the core of insurance. That insurance is a force for good. I'm sure everybody in this room believes that. We don't always convey that to our customers. Our customers we don't always do it as well as we should. But at its core, it is a force for good. And we can use technology integrated with insurance under that shared value concept, where we can address that massive social and economic issue of lots of old people in this world, because the combination of biotech and infotech means we can keep people alive. There are many people in this room, you're going to be glad to hear, you're going to live to 120. It is possible, or more, keep you alive until then, but not necessarily in good health. So you could face the future living from the age to 80 to 120 in poor health. Oh, and by the way, as Alice saying, outliving your savings too. Old, ill health, 40 years, no money. Not a very bright future. But we can play a part in that together, so with public-private partnership, working together, improving people's well-being, physical, mental, and financial well-being. We can play a part in that. And this is what we must use technology for. Let me just, some statistics I've got to share, Bernard. So across the 18 markets which AIA operates in, 31 million people died in 2018. That's 52 million people in the world. That's about proportionally right. 31 million people died across our markets. Some 20 million of those died as a result of non-communicable diseases, cancer, diabetes, lung disease, and heart disease. The primary risk driver for those is poor lifestyle choices, lack of physical activity, eating the wrong foods, not sleeping enough, smoking and drinking too much alcohol. All the things that our mothers and fathers and grandparents told us, you might go out, run around, eat your vegetables, get enough sleep, don't smoke and don't drink.
We should do a poll next time on that.
Yeah. And, by the way, save. It's your responsibility to look after your health and your financial wealth. So those things, so of those, that's 20 million. So we can do something about that. We can intervene. But even more shockingly, of those 31 million, 5 million people died across our markets that didn't need to die. 2 million of those died because they couldn't get access to the right medical facilities. So now we know across Asia that it's hard. China is a great example, as Jonathan shared. That's why we partnered with WeDoctor there. They've got Ping An Good Doctor, we partnered with WeDoctor to get people access to medical facilities. So 2 million people died because they couldn't get that. But worse, 3 million died because of poor quality treatment. Okay. Showing poor care is worse than no care. We can do something. We can partner with people to make sure they get the right diagnosis, the right treatment, and the right recovery plans to address those issues. Let's not forget that. Let's use technology together with the power and force of good of insurance to really make a difference to our world.
All right. John, you got to...
I think for sure, we can be sure that disruption will come. It's just a matter of time. In the past, all the developments have been sort of developing in a linear way. I think in the future, all of a sudden, with artificial intelligence, it's going to be exponential, even hyperbolic. I mean, just going to go way crazy. So I think for us perennials, we need to be, very conscious of that, because we are living with a generation of digital natives, and they take things in a much different way than we do. So I think this is something that we need to be quite beware.
We want to sort of bring in more speed up the positive disruption. So we're thinking, actually, for example, we're working on the open API framework. With an open API framework, actually, that will enable consumers easier access to product information, and also help them, they will be able to buy insurance online easier. Another thing we would like to see, apart from virtual insurers, we would like to see virtual brokers. Insurance brokers, online insurance brokers. So, and another one that we are looking at, for example, is P2P insurance. So all these are, new initiatives, and which actually would increase people's awareness of insurance and enhance the inclusiveness and, access to insurance.
We are running out of time now for this session, but I learned something new from Alice just a few days ago. She came to see me on different things, not on this conference. But she came back from a World Economic Forum, and she told me one of the burning topic now in Davos, at least coming in Davos next month, is the topic on capitalism. Right? So we have been for longest time from shareholders capitalism to, of course, in China they adopt state capitalism. So apparently the biggest thing now is stakeholders capitalism. And what is stakeholder capitalism? In other words, I think it can really sum up to, well, not winner takes all. I think we have been adopting winner takes all, like Hong Kong. I don't want to go into the politics of things, but I think we all know what it is, right? So here we are. So hearing from Jonathan and Mark, and giving what you said about the future, the fintech, and as company to, your company, Ping An and AIA in particular, if you're going to be that big and influential, I think you fit into that whole stakeholder capitalism. It's not about making money only. Making money is important. That's right. So what is that purpose? So reason I bring this up, because I'm looking at Clement now. Maybe that will be your theme, and also Moses, the theme for next year. Because I think this is where do you go from here? You're from an insurance company or financial company to a technology, and what's next? So financial inclusion definitely is a topic why we're here for this session. But then more importantly is what purpose, as a company that we serve. I think that will be a big topic, right, Alice, coming up in Davos and so on, because I think increasingly winner takes all is not sustainable, and you're going to see social unrest everywhere. Coming, and I think it's a very challenging topic for the government. So anyway, may I have your round of applause to all our speakers this afternoon for their wonderful sharing. Thank you.